2024. So it's really important for us to really make sure that we have a full understanding of what is going on right now in community association management at the condo, co-op, and homeowner association. So we reached out to our professional partners, our state senators, and our elected officials, and even Travis Moore, who is our CAI lobbyist, for answers. And several people told us that we needed to call Lisa Miller because she is actively advocating on our behalf right now for change in Tallahassee. So I'd like to start by introducing everybody on the panel. And our first introduction is going to be Don Brady with RB Johnson. Don?
Good morning, everyone. Yes, we've been in business since 1921. I've been in the Jupiter office for 33 years. We specialize in condominiums, property owners association, and homeowners associations. And I'm looking forward to discussing some of the issues today and answering any questions.
Next, I'd like to introduce Paula from Rosenbaum PLLC.
Good morning. Thank you, Erin. Thank you, everyone, for attending. My name is Paula Mera with Rosenbaum Law Firm. Been practicing 21 years in condominium association, homeowners association, country club, co-op law, everything to do with general counsel, anything from land use planning. Also, obviously, we're here today for insurance as well. So we look forward to having a great panel, providing you guys enough information to at least move forward with a few takeaway points on where we're going to be in the future.
Thank you, Paula. I'd like to introduce Rick Collins of Bridgepoint Global.
Hi, thanks, Erin. Rick Collins, Bridgepoint. Basically been around 35 plus years in the insurance restoration, adjusting, documentation type industry. Basically, we deal with risk mitigation, building science, and claims management. Looking forward to today's panel and conversation.
Awesome. I'd like to introduce former Senator Jeff Brandes.
Hey, great to be with you all. Served in the legislature for 12 years and did a lot of work in the insurance space. Honored to be with you and look forward to joining the conversation.
And last but not least, I'd love to introduce Lisa Miller.
Thank you so much, Erin. And Senator Brandes is way too modest. He and I teamed together from the first day I met him. He understands insurance. There's only about 3 to 5 in the legislature that do or even want to. And we do everything we can to educate him because this is about raising the awareness of what's going on now, what has happened in the past, what we can do in the future. I'm Florida's former deputy insurance commissioner, and I've spent my past 30 years either in regulation or in advocacy, just trying to make it better for condo board members, residential homeowners, and those that have to live and breathe insurance. Thanks for being here. Thanks for giving me the opportunity to be here. And I look forward to the chat.
And my name is Erin Nickerson. I'm with the Rapid Response Team, and I respond when you have an insurable issue, fire, water, mold. So I am boots on the ground before you get to filing the claim process. So I'd like to start with Lisa. Can you tell us a little bit about what's happening in the Florida insurance market right now? Why are we seeing such high premiums? Why is there a lack of carriers? And I'll let you take it from here.
Sure. First of all, I want to thank all of you. I think there's probably folks, close to 500 folks on this call, which means all of you are going to take an hour or two with us. And at the end of this call, you're going to get a call to action. We're going to ask you to help us. Former Senator Brandes calling Jeff, me, Don, those on this call. We can't do it alone. Travis Moore, who is a fabulous advocate for Community Associations Institute. I see him in the Capitol with me every single day. You're lucky to have him. He admits he doesn't know insurance and doesn't want to know it because he's got me to rely on, and I do what I can to help him. But we are up in the Capitol now discussing 4 things. First of all, what is this market? What does this market mean? We have in Florida 7.5 million residential property insurance policies. That includes unit owners, that includes commercial residential, that includes mobile homes. So think about that. California, by example, has 12 million. In the residential space, single family homes, there's about 40 insurance companies that write most of the business, about 90% of those policies. In the commercial residential space, there's about 5. that are what we call admitted. There's a lot in the surplus lines area. You're familiar with Lloyd's and several of the others, but in general, there's about 5 because they're writing high volume, high dollar risk. So if a company like that has 2,000 policies, that represents hundreds and thousands of homeowners. So think about it in that perspective. There used to be many, many more, and you ask yourself, why? In the past 8 to 10 years, folks like Jeff, me, others have been trying to bring to the legislature's attention. There's 3 reasons why this market is shrinking. One was the runaway litigation. You can't go to the grocery store without seeing a bus that has a billboard that says, call so-and-so, let us sue your insurance company. You can't drive down a street without it. You can't see a TV show without 15 commercials about it. So to say that Florida has runaway litigation is an understatement. And the legislature has done some things to fix it. I'll talk about that in just a second. Secondly, we know that it's the weather. You keep hearing about extreme weather. It's only going to get worse. And when it gets worse, it makes expenses go up. Look at Hurricane Ian. I was around in Hurricane Andrew in 1993. That storm did a number on Florida. Ian was worse, and it's only going to get worse. Third is reinsurance. And I know Jeff has a dollar bill in his pocket, and we're going to talk about that in just a second. But for every dollar bill of premium that you and I pay, about 35 to 40 cents of that goes to Bermuda, London, Germany, around the world for reinsurance, which is insurance for insurance companies. My goal for this call is to educate you on piece number 3. How do we bring down that cost of reinsurance, which will bring down, or shall I say, stabilize the insurance premiums you're paying? It's not complicated. I want it to become as cool to you as mitigation or Starbucks or whatever it is that makes you happy. I want to talk about bringing down the cost of reinsurance.
Right.
And I'll turn it back over to you, Aaron, and we'll continue to dive into this entire theme.
Thank you, Lisa. That was very informative. And Don, can you explain right now for you as an agent why companies have dropped out and what the insurance companies are requiring for renewals for your clients?
Most of the challenges that we're facing now is the information that they've obtained from all the hurricanes. And number one issue is roofs. And almost all of the markets, the first question is, what is the age of the roof? They want to see mitigation forms. The mitigation forms show the permit date when the last roof was replaced. So the challenge we have for us is to get out early to our customers and let them know that if there is a cancellation pending, because these companies are dropping left and right, and we really are down to basically 3 companies left that are writing in South Florida. And depending on distance to the ocean, frame, joist and masonry, fire resistant construction, each one of those will carry a different rate. So we're having to get out, tell them early if they're on the verge of the roofs being out of date. And most of the new markets that will look, they're looking at either 10 or 12 years as the date they want to see for a roof replacement. If you get up around 15 or 20 years, depending on the type of roof, they decline because their reinsurance won't allow them to write the policies. So that's the number one challenge. Probably behind that, they're asking for certifications. Some of them are wanting to see if there's any concrete issues, spalling. If they're going to have any pending projects in that year. They want to know, they want to see the engineering report. They want to know when it's going to start, how it's funded, and when it's going to be completed. And if they feel that it's a deterrent to their reinsurers, or if it's something they can't handle, they're declining right up front. It's a very difficult market, so that's probably the biggest challenges that we have right now is to educate the associations out there of what we're going to be facing. I could go on and on, but those are the 2 big ones that we're facing right now.
And Donna, it sounds like to me that all of the items that you just listed are maintainable items that should be done on a consistent and regular basis, not just for insurance purposes, correct?
Yes, but they have now become the focal point for all these companies because most of them have figured out that which types of roofs have fared the best. And as an example, Monroe County, after Irma passed an ordinance that only metal roofs can go back. So they're giving a higher rating on metal roofs. Right now they are. So if people are going to be going into a roofing project, I know that the metals run a little bit more, but certainly the roof consultants, structural engineers can help them out on that. But yes, it's the information they've obtained from all these losses.
And I kind of like the last thing you brought up, the roofing consultant. There's so many consultants that specialize in specific projects that your property manager can't be a jack of all trade on. And you really need to go to the experts and consult with them on what is the right roof for your property, what is the right paint for your property if you're doing a large scale painting projects. You don't need to know everything. So thank you for bringing that up, Don. Paula and Jeff, is there any legislation on the current horizon that would help community associations with the insurance crisis?
I'll address that first with respect to what's on the horizon, even with respect to the condo bill for the Surfside tragedy. That's the focus of the Florida Bar Committee at this point in time. So unfortunately, insurance has, for that purpose, from the Bar Committee, shifted kind of down lower, which is unfortunate. And to Lisa's point, for all of our listeners today, that's why we need to really get out and go and through the legislature to make sure that we're hearing our voice with respect to the insurance. So I think really kind of from my point of view from the legislature, we are really trying to address the Surfside issues, because I do think also with the SIRS and all of the milestone inspections, I don't know what would come if timeframes are not changed. How will the insurance industry address those failures? If I have a client that hasn't received their SIRS, if I have a client who has not received their milestone inspection, and like to Don's point, they're looking at things like your engineering reports, et cetera, the condition of your property with respect to whether you're going to be a condo that will be in their market, will want to issue that insurance. So I think for now, I have not seen anything on the insurance side of it. What I'm seeing is trying to move back the milestone inspections, the SIRS report.
Well,
Yeah.
one more thing about that, and Jeff, I want you to jump in here. There is the bill that's filed this year to fix the glitches in the Senate Bill 4D. Is that right? Paula, have you seen that bill, or has anybody seen that bill? It just was released.
I've seen that.
Okay, I think this audience would want to see, there should be a staff analysis out by Sunday or Monday of what that bill is doing. But the bigger issue is a side by side, maybe Travis can help you with that, of Senate Bill 4D and what this new bill is going to fix in that bill. That'd be an awesome thing. I'm sure Travis can do it in his sleep, but I just want to put that on your radar. Jeff, over to you. What is your perspective?
Well, I think the two big challenges that condos are facing right now are reserves and reinsurance. Those two issues are kind of two gigantic black clouds sitting over all major condos in the state of Florida. The race to right size your reserves or to meet the reserve requirements required in last year's legislation, I think are onerous, and I think ultimately the legislature will back off some of those requirements because they just can't be met. And the cost of meeting them will be astronomical, but that doesn't mean you shouldn't press forward on that. And two, the reinsurance issue, quietly has become the 800-pound gorilla in the world of property insurance in the state of Florida. It's not something that Florida insurers can even address independently. There just isn't a market for reinsurance at the lower levels, which is what's really driving all of this cost. Ultimately, the reinsurers from Bermuda and London, they're happy to write above the catastrophic fund, that creates a donut hole or a layer below the cat fund that they just won't write, and insurers just don't have the capital to be able to sustain a loss without that level of reinsurance. And so many of them have just withdrawn totally from the marketplace, and that's really what's driving all of these challenges, is the lack of participation for insurers because they can't participate. They have taken, after Ian, after Nicole, after the years of litigation, understand at one point last year, Florida was just 7% or 8% of total US property claims, but we were almost 80% of the litigation in the nation. Well, look, the insurance industry has lost $1 billion for the last 4 or 5 years. How many of you want to take millions of dollars and invest in a company that writes insurance in Florida after you've seen losses like that? The challenge that we have overall is rates can't keep up to the litigation. Now, the legislature tried to adjust that litigation in the last special session that happened in December. Unfortunately, with insurance, it takes 18 to 24 months for that to roll through everybody's books, because insurance looks at the past as more so than it looks at the future. And what insurers are looking at is past losses. And what they did is they got creamed in legislation for years. And reinsurers have gotten creamed in Florida and legislation for years. And they've seen huge losses. And so they're looking to recoup some of that. But ultimately, they have to have rates that are actuarially sound. But they're looking at the past, not the future right now. So we have to get some current data and some current numbers in. Now, the numbers look positive for January and February so far, that we've seen litigation beginning to drop. But if you're an insurance company in Bermuda and you've got all this risk on the table, you're not willing to lower your premiums until you see real results, not 1 or 2 months of anecdotal non-storm related claims. And so that's what's happening in the marketplace. The challenge that the state has is that bottom layer of reinsurance. Ultimately, the state is going to have to fill that. That means it's going to have to take money from the general revenue or other places and fill that hole that normally would be spread throughout the world through reinsurance. But there is no reinsurance market down low right now. There just isn't a market. And so because of that, insurers are pulling out. They're closing shop. We've lost 7 or 8 carriers in just the last 12 months. And there probably will be more failures before June 1st as the reinsurance market continues to harden and more companies decide that Florida is not a place they want to do business. So it's an all hands on deck situation. It is the number one issue, the number one pocketbook issue, and it has been frankly for years. And the big challenge that you face is we're gonna have I would say 1 or 2 very difficult years, and then ultimately things will start to get better. But the legislature knows it's going to have to act this year, and the governor knows that in order to save the reinsurance, in order to save the marketplace, so that there is a market available to even write you at any price.
Wow. Thanks, Jeff. I just want to remind everybody on the call right now, I see a lot of people entering questions in our chat. We are going to address those specific questions at the end of the panel. So we're going to get there, I promise. Lisa, so now that we know where we stand, right? What is your role in compelling action from our elected officials like Jeff to do something about the issues, particularly with the reinsurance?
I want this audience to really take notes and listen. I'm going to be like your mama. Okay. If you've never been to Tallahassee, I invite you to come. We'll host a wonderful dinner for you at my house. I'm an old Southern cook. I live 10 minutes from the Capitol. Jeff is smiling because he's been to my house. Rick's been to my house because I believe you can solve everything over a meal. I come from Plant City, Florida. You sat down with a meal and a cup of coffee and you got it worked out. I see a lot of head shaking. So I invite legislators here and others that want to listen to me about insurance. People either run toward me or they run the other way. And more run the other way because they don't want to hear it. It's complicated. You heard Jeff do his best to talk about the Florida Hurricane Catastrophe Fund, which is the only fund of its kind in the country. It's Florida's government's reinsurance company. It's the coolest thing going. It's got $14 billion in it. Jeff, for 12 years in the legislature, has tried to get the legislature to take that fund and let it be flexible. The government's reinsurance fund, when the reinsurers around the world get stingy or don't want to be here, let the government's reinsurance fund, the Florida Hurricane Cat Fund, be a shock absorber. That just isn't happening right now. For some reason, it's falling on deaf ears. Maybe because we need other people talking about it. That's why, as my Sunday school teacher used to say, I'm beseeching all of you to contact your legislators with one message. You board member, you property manager, you insurance agent, know that reinsurance is the big driver of my insurance premiums. I'm asking the legislature to do something about reinsurance over the next couple of years. I don't care what it is, please fix it. 3 sentences, that's it. Many of you know your legislators. You go to church with them, you see them at the Starbucks, your kids go to school with them. It's just that simple. I know my premiums that went from $250,000 last year to $800,000 this year will probably double in September for the next year, unless you, legislator, do something. And then I'm gonna let Jeff go back to Jeff and let him talk about what the governor can and can't do. Jeff?
Well, look, ultimately, just let's talk politics for a second. The governor is driving most of the agenda right now in Tallahassee. We've got a Republican House, Republican Senate, and the governor's obviously Republican, and he's likely to run for president of the United States here in the next few months. And so he's driving all the policy. And so I would argue that the person that you need to advocate to is really the governor's office, and people need to understand, not just the legislature, but you need to be advocating to the governor's office directly how that this is the problem. They need to understand what's going on in the property insurance world. They've just got a brand new insurance commissioner. He's like literally 4 or 5 days old in the space. And so there is going to be a gap between his while he knows the Florida market, he probably hasn't seen the insurance bills that have come out lately in the condo world. And so I think, I would strongly advise you, one, to begin to advocate at the reinsurance for reinsurance coverage for the state of Florida for condos and for these companies, because ultimately, if you don't listen, the sky's the limit of where rates are going to go. But ultimately, you've got to advocate directly to the governor's office. And towards the end, I'll provide you a phone number that you can advocate to directly. So you can call directly and make your voice heard. But also you need to meet with your local elected officials. Now, listen, when you meet with them, most of them will not understand the world of reinsurance. We have the Office of Insurance Regulation, and it's called the OIR. Half of them couldn't spell that word, right? They couldn't spell OIR. They just don't know where it is. They couldn't tell you where the building is. And so part of what you need to do is educate your own legislator about what's going on. And the best way to do that is to bring your bills. Here's what's my bill last year. Here's my bill this year. What are you going to do about it? Mm-hmm. And put them on the spot and hold them accountable. Listen, you all represent thousands and thousands of votes, thousands and thousands of people that should have their voice heard in Tallahassee. And frankly, this is an all hands on deck situation for you all, as much as it is anybody else in the state of Florida. And so I really hope that you will heed my advice. Contact your local House member, your local senator. But if you're going to make one phone call only, contact the governor's office.
I think there's another resource that I just want to bring back up again. No matter where you are in the state of Florida, you have a local chapter of CAI. So there's the Southeast chapter in the Tri-County. There's the Gold Coast chapter in the North Tri-County. On the Gulf Coast, you have the Southwest Gulf Coast chapter. I see a couple people on here, but this is a national organization. Even if you are not in the state of Florida, there is a CAI chapter that is local to you where you can turn to for resources on how you can get more involved in sharing your voice with your local legislation, your local city officials, your elected officials. And CAI also has an advocate, Travis Miller, that we keep talking about, who sits next to Lisa in Tallahassee, advocating for you as homeowners associations and condos associations as your voice. You can get more involved at the local level with them as well. And towards the end, we'll share that information for the national and your local chapters. So I kind of want to bring this back. I know, Rick, we haven't heard a whole lot from you yet. We know it's important to contact our local leaders, our elected officials, but what else can we do in the meantime? Legislative change is a slow process. Risk, perhaps you could talk a little bit about your company, what you guys do at Global, and then how can you help at renewal time?
Sure. Thanks, Erin. And Jeff and Lisa, thanks for articulating many of the problems in this crisis that's going on. There's lots of them to touch on, but what we do at Bridgepoint, we actually have developed a program. It's called RAMP. You can kind of see it behind me. It stands for Risk Analysis Mitigation Program. It was specifically designed primarily for the condo market to deal with the crisis that we're dealing with now. Basically, our program, we deal with four main things, principles that we rely on and with our clients and that is to prepare them to respond, manage, and recover from any loss or catastrophic event. And the preparation of the first part of that, we always say, to properly prepare allows you to respond, and to properly manage allows you to recover. And Jeff, I would like to touch a little bit on what you were talking about. One of the big things that we have seen in our 35 plus years, and we're really seeing it now, you're exactly right, about 7% of the insurance claims in Florida for the nation is what we represent, but we have almost 80% of the litigation for the nation. And so what we have really tried to attack is fraud, which is running up the numbers for everybody, unnecessary appraisal, and litigation. And so we designed this program ramp. And basically what the ramp program is here to do is to help property manager, condo boards to be able to document their properties, be able to present them to the underwriters. As we all know that, the renewals have become harder and harder. They're not like they used to be where it's just automatic and you had multiple, renewal offers each year to choose from. As Lisa said, we have 5 major admitted carriers in the state that are doing large commercial condo market insurance. And, what they're doing now, folks, is they're doing their due diligence. And that is because of fraud, running up the cost. The claims that we've had over the past, since 18, I think we've had 4 hurricanes hit us and, several others hit Louisiana and North Carolina. So the carriers and the reinsurers, they really want to understand what are our risk and what are we insuring. And so that's where our ramp program comes in. And what we do is we come in and we work with the property managers, the property itself, the board, to properly document every aspect of your property. As Lisa has told me, Rick, what you guys do is you got to make the property look the prettiest girl at the dance, because it's crucial for you as the property manager or board members to give your agents the necessary tools to present your property so the underwriters and reinsurers can understand their risk, because that's what they're looking at. And we go a little bit further because we start from A to Z. We start in the prepare, and we're there all the way to you're rebuilt if something happens to you. So part of our program, we're very, very much committed to eliminating fraud, appraisal, and litigation. It just doesn't happen with our clients because we're managing that process from vendor programs. They're working under agreed work authorizations prior to something happening. I can tell you don't want to be signing a contract with a roofer while your roof's in the parking lot. It's not a good idea. We've seen that, honestly, working hand in hand in Fort Myers and Sanibel right now after Hurricane Ian. But I wanted to kind of show maybe the folks what some of the documentation that we do and what it looks like and why it's important.
Are you able to share your screen, Rick? Are you able to share your screen?
I can if I have permission. Sure, I'll try to share it.
And while he's doing that, I want you to know, for those of you on this call, Rick reached out to me via the internet. He had some condo associations that were in worse shape than some of the prices I've seen from some of you. And he said, we can help the insurance companies understand their risk. And I asked Don, and Don, talk about, while he's getting ready to share his screen, if you're able to show an insurance company every crack in the pavement of a condo association versus still pictures, what do you think they want to see, Don? And Rick's able to do every crack in the pavement.
Yeah, they want to see everything now. And then the thing that I have to do, and I've been doing for the last 6 or 8 months, is because this market shifting is to re-emphasize that you can't kick the can down the road anymore. They want to know exactly what your plans are. They want to see your maintenance. They look at your buildings and they come out and do some pre-inspections. They're even doing pre-inspections now. And if they see something they don't like, they just stamp decline. So I try to hope to educate everybody to start paying attention to it, because I think, as mentioned earlier, we got probably a year or two left on this. And hopefully it's going to get better sooner. But I think Lisa and Jeff can probably elaborate on the likelihood of the time frame we've got in front of us. But we've really got to do this. And I just don't even like to go to these meetings anymore, because you're the bearer of bad news, and you don't want to be the bearer of bad news. So hopefully it'll get better soon.
I think, Rick, you brought up something that I want to emphasize again, is the pre-loss contingency programs. This is a pre-loss before something happens, that you know what your risk is. And as a property manager, as a board member, it's so important for you to understand that you have a fiduciary responsibility to your property to make sure that all of your maintainable items are being maintained, your sidewalks, your roofs, any of your mechanicals, and that you need to keep an accurate maintenance record of all of those items. Because if you have those accurate records and Don goes to get you insurance for the year, he can say, look, my association has done their due diligence, the roof is up to date, they have it checked once a year, and I can't wait to see what product you're about to show us, Rick, because this is very cool for me.
Sure, thank you. Yeah, I mean, the program we've designed, I was, just a little background, was the owner and principal of a very large restoration contractor nationwide. So I had that for 30 years. So a lot of our program that we designed is just experience of dealing with billions and billions of dollars of insurance claims, primarily in the condo market. So we kind of understood what was necessary for these condos in order to prepare, and then also be able to respond, and then to manage the process, because we know when something does happen, that what's required, and what is going to keep our clients from going sideways with insurance. And we'll get to that later, I think later in the discussion. Can you see my screen?
Yes.
Did everybody see it says ramp up here? This is a portal. We have our ramp portal from our website, and where our members of the program, they log in. We house and carry all of the information for all the properties that's accessible 24/7, including when there's losses to the adjusters and building consultants and everybody else that's involved. So this portal, I'm just going to show you this one property. I brought this one up particularly because of the fact that this property is one, Don, that you would see that it's 25 plus years old. It's on the water on a barrier island. It's not, one that if you send the application in, that you're probably going to see the underwriter saying, oh, probably not very attractive. Older building on the water, not interested. So I brought this particular one up because they've done a very, very good job of maintaining this property. They've done the right things. And what we try to show within the program, that we give you that tools, Don, to be able to go to the underwriters and the reinsurers and say, look, this is a property that is a little bit older. It is not in the most desirable location, but they've done a good job, and they're a good risk. They're a good looking girl at the dance. So let me jump in. One of the things I'll start with, and in our program is very expansive and very, very detailed. What I have here is basically, this is photogrammetry that we do, which basically what that means is we take thousands and thousands of photos and we stitch them all together to allow us to be able to put the property and be able to know exactly what the current condition of the property. Sorry, it takes a second to load. I'm going to go to we've done this one a couple of times, so it's December 9th. So it'll load up and I'll show you exactly kind of what, this looks like. What this does, it allows us to be able to come in, and I'll start a little bit. we can spin the building around and look at things, but more importantly is we're documenting the property as its current condition. And so what we're also trying to do that is this helps in the claims management. So now we have a baseline that if something happens to the property, and we hope that it doesn't, but if it does, we have a comparison of what it looks like today versus what it looked like, prior to the event. So I call it removing the gray. There's no gray area anymore. Now we, are just black and white. So in this, what I want to be able to do is I can show you this. We can get up to great detail. We have an inspect tool. These cloud pictures, these are all the thousands of pictures that we've taken at the property. And what this allows us to do is we can hone in on one picture and then back out of here. We can, hone in on any particular picture that we want to and come up into, well, say that, hold on one second. Great detail. Let me re-inspect. Okay. So when we're on the property, like I said, we can move around, but we have the ability to hone in and go very, very close and detailed to it. The other thing that it allows us to do is we document areas of the building that we see for concerns. And what that allows us to, I'll tell you what, let me get into HD. I'm sorry, I was not in the high resolution.
And while you're in HD, Dawn, if an insurance underwriter, and this is kind of a lag time because of the internet, do you think an insurance underwriter would take, I think they would, but you tell me, if you were kind of on the bubble with that underwriter and you're keeping your fingers crossed that they'll hit go and renew that policy, you think they take the time to jump on this and look at every crack?
Well, yeah, a lot of them now have a very sophisticated system. They can go down within a couple feet of the roof and see it from satellite. So yes, this does work and it helps, and certainly showing history because they're really looking at the present time. And yes, it helps to show that that there's been a constant maintenance or upgrading to these buildings, and it certainly does help.
And
But
Dawn, I had a question too that kind of pertains to what Lisa just asked. Are carriers currently reviewing appraisals when considering or renewing policies and premiums?
yes,
Yes.
yes.
Thank you.
Unfortunately, they've been very, very a couple of the companies, and I know we have a lot of other things to discuss. I don't want to spend too much time on these things, but the big item right now is because of the supply chain, the increased cost of construction, they're looking at minimum per square foot, and most of them are jumping on condos to $130 to $140 a foot. And a lot of the older appraisals in 2020 and 21 are showing anywhere from 110 to about 120. So a lot of these companies are just absolutely jumping it up, plus hitting them with these big rate increases.
And what recommendation would you give somebody on the call right now if their agent is telling them that they aren't looking at appraisals due to the current state of the market?
Well, it's whether they're going to look at it up front or when they go out for the inspection afterwards. They're more than likely going to come back, but we're experiencing the big issues is with citizens because they require the appraisal no more than 12 months, and then they have a special type of appraisal has to be submitted. But right now it's either most of them are, if they're not agreeing with it, if they do issue the quote, they come back and they see it's at $110, $120 a foot, they may come back and try to make an endorsement change. So I'm just trying to tell everybody up front what to expect and plan for it, because this is what the world we're living in now.
Thank you. Rick, you ready for us?
Yeah, and sorry for maybe a little bit of the blur. I don't know if it's the internet connection but the pictures are typically very, very clear. But some of the tools that we do, if you kind of see on the screen, we have these kind of yellow balloons. what that allows us to do on the left-hand side here is if I just click on, it'll take me right to it. And what it allows us to do is to identify, what it is, what we're seeing, and then we can put a severity on it. And the nice thing about what we're doing here also up in this corner right here is a link. So we provide this link, and it's very easy for us to send the link directly to the property manager, to the board, to the contractor, so they can identify areas that they may need to look at. But we can continue.
So imagine this, Rick and Don, think about this. You see those dots from satellite is not clear. And if I'm an underwriter, I'm thinking this is hail marks or this is whatever. Now they can just see it's some rust. And it takes away them thinking there's damage on that roof. They're looking for any excuse not to write, folks. I hate to be so blunt about it, but I mean, I've talked to many of them and they're being very selective because they only have so many of those dollars. And much of what they write is dependent on their reinsurance ability. You cannot have an insurance market without proper reinsurance. It's the law. And if you can't get it, you can't write it. Back to you, Rick.
Yeah, and Lisa, in this particular case, we identified like 4 or 5 areas, and I have them documented on here. And the board and the property management had no idea that this was even up here. And so they now have taken proactive steps to, and these may look like small little things, which they are. It's not really a big deal to repair that. But what is very, very important that people must understand is if in the event you have a claim, a hurricane comes in and you don't have this documented, then what's happening is the insurance carriers, they're doing their due diligence to be able to have cause and origin. They're sending their engineers or sending their building consultants and adjusters out after an event. And they're identifying these areas. And they're saying, well, wait a minute, this is pre-existing. So we may be denying the coverage on this because this had nothing to do with the recent event. So this particular property, they had no idea that this was occurring. We brought that all to their attention. And like I said, most of these are very, very minor, that we go into any of these observations that, that we picked up. So here's just another one. We kind of have it as a 3. And again, you can tell that's not a hole in the roof. But they needed to address that. So for us in the inspection process, this is kind of the exterior part. We have also 360s. We drone and LiDAR. We drone and infrared.
You keep touching on something that I want to circle back around to again. All of these things that are the responsibility of the association to maintain properly, there's experts that are out there like Rick that you need to put in place at your property. So you keep talking about roofs. Having a yearly roof inspection is no longer unacceptable. You have to get these maintainable items maintained by the professionals that are in the industry. Like Don said before, you cannot kick the can down the road any longer. You have to take responsibility for the property that you're living at. You can't not maintain anymore. And Don, what other recommendations do you have for the community associations as far as what repairs need to be done to keep them in compliance and make sure that, like Rick said, they're not getting denied on claims?
Well, the big issue that we have in most of these board meetings is the discussion to eliminate surprise, because I don't want anybody to be surprised at what's happening in the insurance world and the length of time it's going to take to get this fixed. So what we've been somewhat successful doing is having meetings with the board, letting them know, then they let their people know so that they don't get a big shock when the renewal comes up. And the pre-planning of it to me is key, and nobody wants to get hit with big special assessments. So that's been the big emphasis out there right now, because I think, as we mentioned over and over again, that we've got a little bit of time ahead of us here before this is going to get fixed.
Absolutely. Rick, if you had to pick one maintainable item at associations that you have as a part of your program that you see just on a consistent basis not being maintained properly, what would you say?
I mean, honestly, is roofing is probably the biggest, but I mean, we're so detailed. I mean, we're into mechanicals, fire suppression, building envelope, doors, windows, roofing. But I see probably roofing as the biggest that we see in the properties that probably need the most addressing. And some of the things, you know, this was a metal roof that was on this particular building, but we also do scans on the flat roof. So we can tell if there's moisture within the insulation underneath. So we're documenting all those things and we're bringing it to light if there is issues, so it can be identified to the association or the managers to take proactive steps. But also, you know, it's provided, you know, to allow these agents the proper tools to try to help place the best coverage in the marketplace for the agents.
Absolutely. And Dawn, what do associations and managers need to see or need to get to you for the structural integrity and reserve studies for when you go to get their renewals?
Well, most of the carriers now have a very detailed application. They're centering around current or near future planned upgrades to the building, whether it be spalling roofs, windows, whatever. Most of them right now, they want to know exactly when and how and when these things are going to be finished, because they're not going to allow the associations to say, oh, well, in 6 months from now, we're planning on to start this project. Then that's exactly what they're looking for to stamp decline. And we don't want to get in that position with them. So we try to tell them well in advance that if you're going to do it, go ahead and get your necessary documentation to when you're going to do this, because they're looking for ways not to write the policies instead of looking to ways to write it. And I think somebody else mentioned that as well.
And this lets me segue into the next question that we got from a lot of managers out there. And I think this is going to be a Paula. What can associations do when they get an unwelcome surprise increase of a double or triple? Can they use reserve funds for that?
You cannot use reserve funds for that, but I kind of want to circle back to all of the amazing information we've received so far in this 45 minutes. And I think that from the board of directors point of view, the challenge is really taking everything that you've learned today, condensing that, and then of course, heading into your board meeting when you have to announce that there is a doubling of your insurance premium to your membership. So if there's any takeaway point for today, it's how does the board effectively communicate everything from the reinsurance market to the legislation, to the inspections, to, again, we've referenced taking, you know, being a marketable association so that you can participate with the renewal process. I've been to several meetings this last half year with respect to renewals, with many of the association membership not understanding the value behind actually being renewed from your carrier. And also then, what does that mean? That means that for some reason, the association has met certain requirements with respect to the maintenance of the association buildings, with respect to the inspections that need to be done regularly. Otherwise, we would be talking about then going on to citizens or even the sublines with respect to the insurance. And then communicating, now we have the assessment that has to be increased substantially. And we all know, and Dawn knows, Dawn's the biggest enemy in the room at those meetings. And it's all based upon a misunderstanding of the entire market. So again, kind of the takeaway, if any board member needs the assistance of counsel as well, to make sure that these types of big issues, the bigger market issues, everything can be communicated to that owner and to those owners who are living on a fixed income. I think really from a board of directors point of view and from a manager's point of view, that's what they're interfacing with all of the time. So anytime that you can take steps to make sure that you're communicating on all of those facets, especially the maintenance facet moving forward, even though, like you mentioned, Aaron, can we use reserves for that purpose? And the answer is no, we cannot do that. I don't know if there's really any product for loans at this point in time as well with respect to those. So that's another big topic that's been talked about from time to time for some of my clients. But ultimately, the net result is an increase in your assessment. And again, communication, because what we'll find oftentimes is members going out, trying to even understand the market on their own, which just leads to additional confusion, misinformation, and then ultimately the administration of the association from a day-to-day basis is interrupted for those purposes. Also, just again, the maintenance, going back to the maintenance, if you do not have and you are not that association that's marketable, you will potentially not be renewed. So going back to, we have the reserves issues coming down, we have the glitch bill, we'll be putting out an article on that as well, just so our association board members have, again, the communication is key to be able to walk into these meetings with Dawn or with your insurance agent and communicate to the owners that the board has done everything diligently with respect to, first of all, being renewed with your carrier, not being dropped, and looking forward into the future so that you're not dropped, doing the maintenance that's required, making sure your inspections are performed. I want to touch upon milestone inspections too, with respect to my experience lately. I have clients that were very diligent in preparing a milestone inspection, obviously prior to the due date of December 31st, 2024. But what I have seen that result in, out of 5 different cases that I've seen, 3 of those were turned over then to the municipality. So keep that in mind too. I'm just going to touch upon that, leading to a code enforcement issue for our clients. So definitely touch base with respect to the milestone inspections with your legal counsel. You don't want to obviously avoid the maintenance that's required under those milestone inspections, but you also want to be cautious with respect to being kicked over to those strict code enforcements with respect to a condition or 2 on your building. Which also, again, going back to the inspection reports, you'll want to make sure you do those timely. I have many association clients that do not have those and they're not understanding why they haven't been renewed. So all of those types of things, all of this information then being condensed down into an understandable version so that your membership understands both with the renewal, the assessments. You cannot use reserves for those purposes. We are increasing our reserves at the same time. And most of the time, potentially we have kicked the can down the road. So we're getting hit from all directions with those assessments increasing.
And this has obviously been a major impact for everybody in the state of Florida, but specifically for condos and co-ops who are seeing the worst increases and now compounded with other new laws that are being imposed on them, specifically SB 4D. Lisa and Jeff, the forecast is more collection issues and even condo terminations from the rising costs. How can we make the state aware of those concerns, particularly for the vulnerable age-restricted communities that are out there?
Lisa?
Okay. It all goes back to communication with those that are making these laws. I mean, to be honest with you, when Senate Bill 4D passed in May of 2022, there was nobody in the room. Travis was there, representatives of CAI, and when you're an association like CAI, just the initial CAI, there's a few on here that don't know what it is. It's the Community Associations Institute. It is an advocacy group. It is an information sharing group, but they can only do so much. And people pay dues to this association. I volunteer my time with Travis because I love him like a brother and help where I can because I have insurance companies that want us to make it better for everybody. But you think about this 4D, and I heard the hue and cry when 4D passed. People are going to get hit with assessments. They're not going to be able to do these reserves. They're not going to be able to shore up these buildings. So Rick reached out to me when that bill passed and said, oh my gosh, he knows people that live in condos. We've got to help them understand what they have. In fact, somebody asked on these questions, what happens if we're an ugly girl at the dance? Meaning, what happens when Rick comes in and he does all this beautiful analysis and it shows all the pitfalls? To me, it's better for Dawn to say, these people are unafraid to show you the vulnerabilities they have, but here's their plan to fix it, whatever that looks like. It's a hard story to sell versus the condo association that has done what they need to do to make themselves be very attractive in the market and to make sure that their vulnerabilities are there. So what are we going to do about 4D, and how are we going to deal with this new law that's going to pass? That probably is going to pass. I talked to Travis this morning about it. That's supposed to fix some of these glitches, as Jeff said. Pick up the phone, get in the car, come up here and get in these hallways, and just walk in and out of these hallways with your invoices in your hands, with pictures that you have from Rick to say, we even look like this, look how good we are, and this is what we're facing. It's all you can do. So there's a short term and there's a long term. Short term, know what's in your buildings and be able to help Don and the other agents demonstrate it. Long term, preach bringing reinsurance costs down, which should hopefully stabilize your premiums.
I think that you said something
Yeah.
that was so beautiful, Lisa. In order to be the pretty girl at the dance, you have to know what your shortcomings are. You
Yes.
can't not know what you're working with and go and expect Dawn to get you a rate at all. You have to know where your shortfalls are, and that is staying on top of your preventative maintenance programs, being aggressive with them, knowing the age of your roof, knowing the age of your concrete repair, knowing the age of your paint. That way you can make better decisions moving forward. You don't know what you don't know until you inspect your building. Jeff,
Aaron, yeah, real quickly, I was going to add to both what you and Lisa just said. Even if you're lucky enough to get a renewal and you have a current policy in place, if you have a catastrophic event hit your property, does not necessarily mean that those problems are going to go away and they're just going to be fixed by insurance. They're going to come in and they're going to investigate, and then you're going to be fighting with coverage issues at that juncture. So, to me, it is very important to identify what they are and have a proactive plan in place to try to correct those. And you're exactly right, Lisa. It helps Don to be able to say, hey, this is where we are now, and this is where we're going, and identify it. So just because you have a policy in place doesn't mean that you're always going to get paid.
absolutely. I know
So-
I jumped in a little quick. Jeff, is there anything else that you want to add, what we can do as board members, as property managers, living in community associations, how we can be heard?
Yeah, the best thing that you can do is work with your insurance companies and come up with a list of things that the legislature needs to advocate for. I always tell people, if you want to be successful in the legislative process, you need a vision, and you need a champion, right? So you have to have a cohesive vision. If all 1,875 of you go out and advocate for something different, then we're going to have real problems, because the legislature is going to think, these guys are schizophrenic. At the end of the day, focus your message. Work with your insurance companies in order to figure out what the right messaging should be. Have a focused conversation about that. If you can only play one note, play it loudly, because you need to be, that's what's going to break through the legislative process. You need to be, one, having your bills out there and saying, here is the problem. Two, come to the legislature with a solution. Do not just come to them with a problem. Most of your legislators are not smart enough to come up with a solution on their own. You and your insurance companies and your attorneys working together need to help bring the solution and make it easy for them to do the right thing. And, and they sometimes they will do that. They need to understand what's going on. But throughout this discussion today, let me tell you, insurance is the number one cost that your condos are facing. You need to become experts at or hiring experts to make sure you understand the risk of that property and are doing everything you can to mitigate it first, but then working and advocating to the legislature to fix the things that only, frankly, the legislature can fix. Nobody else is going to come fix the reinsurance market. That isn't going to happen, right? There is no outside forces of money coming in to help resolve that issue. Fix what you can fix and first, and then advocate for what only Tallahassee can fix, which means getting in front of your legislators. Most of your legislators don't live in condos. Most of them live in single family homes or apartments. Most of them have not had the experience of being on a condo board. Most of them don't understand the challenges you're facing. You're not going to be able to get rid of wind insurance. Some people say, oh, we'll just get rid of wind. That isn't going to happen, right? Your insurance, your mortgage companies, your bank underwriters are never going to let that happen. You're forced to deal with this issue. You've got to be proactive with both your properties and with the legislature to get them to fix what they can fix, but take care of your own house first.
Thank you. I know that we've gotten this question a lot, and this is probably a me and you question, Rick. How important is it to manage our claims properly from the beginning to avoid litigation?
It's crucial. I mean, I tell people all the time, I mean, in kind of the crisis we're in, if you really think about it, if we didn't have claims, we probably wouldn't be in this situation now. The carriers would have plenty of money in reserves. They'd be making record profits. They wouldn't be raising rates. It all really boils down to claims and the way the claims are managed. And so for us of 30 plus years of doing it, we built our technologies. We built proprietary technologies to handle claims. And it's from clerking from the very beginning through our portal of being completely transparent, working with the carriers, adjusters, and building consultants, engineers to work together and manage the process. Our process is also, we do all of the clerking, we do all the incurred costs, and we produce that incurred cost every day. So if there's a loss, we publish that every day. So at the end of that day, everybody knows exactly where the cost stands. We do all of the auditing. So basically, we're kind of the hub of the wheel that brings all the parties together to properly manage. And what that ends up doing is by eliminating that gray area, properly documenting, being transparent, working together, it allows the process to move forward. It allows the contractors to come in and charge a reasonable rate and be fairly compensated, allows them to be paid in a timely manner. It allows the insureds and the condos to have the least amount of out-of-pocket expense. And but it's absolutely critical that you manage your claims properly, because if you don't, that's where the fight begins, and that's where the litigation comes into play. And we're very much an advocate against, the litigation. So
Absolutely. And you said a couple of things that I want to touch on. As a property manager, a board member, a unit owner, a single family home owner, you are not an expert in managing the claim. There are people out there that are experts, and you have a lot of those people on this call today. You have your attorney, you have your insurance agent, who should always be involved in the filing of a claim process. And the number one key and ammunition to avoid the litigation, and if it does go to litigation, is to give the proper documentation, like Rick said, to your attorney, Paula, and say, I've been documenting this with photographs, communication from day one, and we were proactive in our claim process. We were not reactive. Because I think, Paul, you can agree with me, if you have the documentation to go to something like a subrogation litigation case, that's what you need.
Yes, and actually, about 1.5 years ago, we started to instruct our clients differently with respect to especially water damage claims and how to handle those from the minute they receive information that there has been damage relating to water or any other type of damage. And it starts with the manager, typically, as we all know. But to that, it also documentation, getting someone like Aaron, who is already on board as a vendor for your association, is so important. We have been dealing with an uptick. There's already, of course, been the subrogation claims that have been out there, but I've seen an uptick in the last 6 months. And we are actually addressing those a little bit differently, so long as my client has sufficient documentation and evidence that the claim is not valid. There is no negligence on the part of the association. Some of the complaints that are filed will cite allegations or facts that don't even relate to actually what happened in that particular unit. And they're seeking to subrogate anywhere between, of course, a small claim like a $5,000 claim to upwards of $25,000. And depending on those dollar amounts, if my client has followed our instructions with respect to documenting every type of claim that occurs in those condo units, or on the condo property, then we will address those with the client specifically. We do not and have not been just shifting those back over to their carrier. And we've been defending some of those from our office. We have shifted some to the carrier, and they weren't defended, even though the facts of the case really were not pursuant to what they've been alleged at all. Totally different facts whatsoever. So we've been looking at those with more scrutiny and giving our clients the option to fight those here from our desk Again, there's a lot of factors you have to look at with respect to that, and your attorney will let you know what those factors are, not to turn something over as a claim. But those subrogation claims, typically, as you know, they're a dollar stated amount. So we're fighting 4 of those right now on behalf of our clients, because those claims that as filed were basically fraudulent. None of those facts occurred. So from even the lower level, to try to get that litigation down, we took the approach that anything that we can do, even from our firm's desk, to try to get those attorneys and one particular insurer to stop filing those subrogation claims that are not based in fact whatsoever. But we can only do that, back to the point, we can only do that when our clients have well documented that it was a roof leak. The person was contacted at 3:30 on Tuesday or wherever, and that roof leak was fixed the following day. For example, we have a subrogation claim. There's the only pictures that they have is a puddle of water on a wood floor, but yet that entire wood floor throughout the entire unit was replaced. So that gives you an example. So we're going to court on that one. We're going to go to trial on that one. And the client knows and understands all the factors, but the board is on the same page as us just generally, where we have to start somewhere. And if it's a small subrogation claim that we're going to defend, we're going to defend that. But we have to have the evidence to defend it that we feel confident and comfortable to give our client that advice.
Thank you. And I think there's 2 things that you said that I want to roll back on. Making sure that you are vetting your vendors before events occur is imperative. All of your vendors should be licensed and insured, and you should be getting references from them, especially if you're in the condo or co-op world. There's such a significant difference in working in a condo versus a single family home. And a vendor who only works in a single family home should not be working in your condo building. They don't understand your documents. They don't understand your responsibility versus the unit owner responsibility. I mean, you could call 4 of my clients right now and they would give you a stellar review. You should be doing that with all of your vendors, not just your restoration partners, your roofers, your landscapers, your painters, your life safety companies. Anybody that steps foot on your property should be properly vetted, and they should also be providing you with a COI, naming the association as an additional insured. That is so important for liability claims. I guess now we're going to turn it over to the question and answer section. Don, this one I got from at least 4 or 5 people during this call. What do you do if you are not insurable or reinsurable?
I happen to see that question pop up quite often. I think the best way to address that at the moment, we haven't had to face that in the last few years because we had a soft market. So everybody was out there willing to write. There wasn't anything like we're seeing now. We're totally in uncharted waters, in my opinion, because the associations somewhat got exposed, or it was brought to their attention after Surfside collapse. It's because the facts of that case was they knew about the building's condition. They didn't do anything about it, and they just kept pushing it down the road. Now I'm trying to explain to everybody that we have to pre-plan for this, because the word uninsurable possibly could take place, but citizens has become very difficult even to deal with. We used to be relatively simple to get in there. Now we have to do all this pre-work that has to be done. You have to have a current appraisal. You have to have a roof certification. You have to have a new mitigation forms. It just goes on and on and on. We have to upload everything in advance, send it in for approval. Right now, Citizens is so inundated with submissions. Some people have gone past the anniversary date, but they're holding the date. I just got one finally cleared in Abacoa. It was 2 weeks after the anniversary date before we got clearance from Citizens. So this has become a bigger and bigger problem. I think it's going to get larger because that word uninsurable could take place, because if the roofs are past the 20 or 25 year mark, they haven't done anything about the roofs. They can't go out all of a sudden and get roofers to come in. We've still got supply chain issues. I could talk about this for quite some time, but I think ultimately the uninsurable may end up at Citizens, and they're going to have to take them. They are giving us, I can give you some specific examples, but we had an association that had 14 buildings, and 2 of the buildings were not replaced, and after inspection, the certification gave it less than a year of useful life. They wanted to exclude those buildings. We finally had to go up all the way up Citizens to get those included, but we had to get a contract. So it's just going to be that type of a thing where it's going to be a tough road to get there. But my suggestion to all my associations is, hey, we got to start planning ahead of time so that we don't get into this position. And if we do have the necessary documentation, we can go ahead of time to these insurers and say, listen, this is what they're doing. This is the roof ages. They've got it all scheduled for replacement. So you get the picture, but I hope that we don't get to that level. The thing that does worry me, and I'll touch on it briefly, and maybe Jeff and everybody else on here and Lisa can talk about this as well. We are running into a capacity issue on larger accounts. So if you have $100 million association with 45 to 70 buildings, and we can't get there in terms of the open market, and the standard markets won't take it because of age of roof. Now we have to layer these programs up to the 100 million mark. I have one that we've got 92 million in coverage, and we're right now at 68 million. So if the word loss limit starts popping up with these insurers, you might have to buy a loss limit. And then we've got another problem that may exist, and that's with the banks on force placing coverage, because the bank will see that the 100 million is not present to insure the buildings, only 68 million. So what will the banks do at that point? And I'm interested to see what Jeff and Lisa think about that, because that could be a reality of where we're going because of the capacity in the marketplace.
So,
Jeff or Lisa?
Jeff, on it?
Well, look, I mean, listen, this is, we have never seen anything like this in the state of Florida's history.
Yes.
Right? There used to be plenty of people that were writing. There used to be surplus lines carriers that would write companies that, if the traditional admitted companies would not. And Citizens played a role as kind of the insurer of last resort. The thing is, Citizens is now overwhelmed with policies, literally
Yes.
overwhelmed. They are, they're at 1.5, 1.6 million policies. They'll probably be at 2 million policies by the first quarter of next year, meaning they're, 15 to 20% of the entire Florida market is written by one government-run backed property insurer, which is insane on its face. But here's the thing: the legislature has let this happen. That we've known about these problems for years. The challenge you all have is you all have to deal with it, right? The best way you're going to do that is getting in front of them and explaining to them how hard this problem is. Because you're exactly right. Listen, the last place you want to be is in force placed, right? Force placed is, you thinking rates are high now, get the force placed, they're going to double, right? Because when you start getting into force placed, people don't even know what they're insuring. So they just throw you a number out and you have no choice but to take it. It's so you don't want to be there. But we are in uncharted waters, and for anybody to tell you they know, especially a retired legislature, to tell what the world's going to look like, I think it's going to get better in 24 to 36 months. But I know that you're going to have to go through, this is hell for the next 24 to 36 months for writing insurance and trying to get insurance and trying to reinsure your property. It's just going to be terrible. But there's very few options.
Unless we get those reinsurance rates down.
Right.
All we want is a couple of billion, literally $2 billion. And I know you think that's crazy, but I see a lot of questions because I'm blind. I'm sitting here looking at these questions. Let me go back to basics on reinsurance. Florida has its reinsurance company called the Florida Hurricane Catastrophe Fund. And then you have all the private companies around the world. We're the only state in the country that has our own private reinsurance company called the CAT Fund. No, it's not a rescue fund for felines. It is a catastrophe fund with $14 billion in the bank. The governor has to decide, do I take a couple billion out of that and make it accessible and available to these insurance companies? And I'm having it down here because the CAT Fund, collectively, all the companies that buy into it have to exhaust their deductibles, if you will, up to $9 billion. So this gap from $0 to $9 billion. When Jeff talks about the lower layers, they have to buy reinsurance down here. Why can't the cat fund put some money down here? Why wait till it gets to $9 billion? We just want a couple $1 billion right in here. We can bring that cost down because it's state government money, right? It's been paid for by the insurance companies. They've contributed to this cat fund. Just makes so much sense to take that 40 to 45 cents of that dollar down to 30 or 35 cents. You see how simple that can be. So your message is 3 sentences. My rates have doubled. We know reinsurance drives those rates. What are you going to do about it? And here's a copy of my premium statements. That's it. It's a short conversation.
Thank you, Lisa. I want to touch on another question that you just brought up again. Jeff mentioned the lower tier policies. Can someone define those tiers by size, value? This particular building has 125 units, 2 8-story towers right on the Gulf of Pensacola Beach. What are they in respect to risk?
So Jeff, I think what they're talking about when you use tiers, you were talking about tiers in the cat fund from 0
Tiers
to
of the cat, that's correct, right? So
Right.
that first $9 billion is what basically is unavailable in the private market today, right? The reinsurers do not want to write that layer of reinsurance. Then you have the cat fund that kicks in for that next layer generally. And then above the cat fund is where, and so typically below the cat fund and above the cat fund is where the reinsurers have played a significant role in stabilizing the Florida market.
So
But because they're seeing so many losses below the cat fund, that $9 billion, that $0 to $9 billion layer, they've said, no mas, we're not playing down there. We'll write above it, but we're not going to write below it. So what does that mean? Well, that means insurance companies who can't get money or can't get capital secured for that bottom layer are basically out of luck. They either have to shut down their business or they have to shrink their business, which is what's created the problem in Florida now, because we've had so many companies shrink their business in order to get enough layer in that lower reinsurance level that there's essentially nobody writing.
So
So essentially our day-to-day losses are all in that lower level.
yes.
Well, correct. Remember, your first dollar of insurance is the most expensive. And so they don't want to write that lower level.
For catastrophe losses,
Correct.
wind-related losses, not everyday losses. So the question that person asked is, well, where do we fit in these tiers? Here's how you fit in. Your insurance company buys reinsurance from the cat fund and the private companies. You're the benefactor of that because you want them to buy it as a condo association. So you don't really fit in a tier. You're part of this big pool of insurance and reinsurance. But if that insurance company can't get enough reinsurance, you're kicked, they're leaving or they're not writing and you suffer from it. So you're not, the tier doesn't really go where you sit. It's where the reinsurance and the insurance company sit. All you got to know is this: if we can get reinsurance, a bridge stabilized, we can stabilize these premiums. Got to do it. Session starts March 7th. Today is February 17th. We have about 3 weeks to try to convince the governor to do this. That's it.
We keep getting a lot of questions about silicone roofs. So I guess where we start, everybody wants to know why the insurance carriers are giving such pushback on silicone roofs versus the standard roofs for their condo associations.
Rick, I'm gonna let you start on that one, and I'll give you what they're telling us. But from a construction standpoint, if you'll answer that, I'll tell you what the insurance companies are saying.
Well, what we're seeing is, the pushback is the silicone roofs are more successful to repairs, and it's just not a full adhered system, from the foam silicone. It's, and a lot of it's not meeting the uplift and the wind ratings. So, we're seeing that there is a lot of pushback, for those systems.
Okay, the insurance company's position is, and I'll give you a broad overview because some of the carriers have different positions on it. But their position is it's still, if it's a 20-year-old roof and they put this material over the top of the 20-year-old roof, yes, it extends the life of the roof. It looks quite nice for a time period, but it's still a 20-year-old roof. if that silicone or the material they put up there is pierced, the water intrusion still can take place because more than likely there's the material underneath, whether it's asphalt shingle, whatever it is, or if it's a buildup tar and gravel roof, flat roof, it's still there. And they are looking, and they stop looking at those materials, and they want to know when was the roof permit pulled to replace it to a brand new roof. And then with the new building code changes, all of them want to see that building code upgrade to those roofs. Citizens will only give it 1 more year, possibly 2 years, and they call it a maintenance improvement. And basically, they'll give you a year or two to replace the roofs, but that's as far as they'll go with it. Most of the other carriers, if they see that material up there, they still decline it because they will revert back to when that permit was pulled to replace that roof.
Thank you, Don. Thank you, Rick. We have a lot of questions going towards Lisa or Jeff right now. Do you feel that the legislator will have any appetite for allowing associations to drop wind coverage?
No, well, because your bankers won't allow you to drop wind coverage likely. And so the answer will be no. I mean, and then, what kind of risk are you putting on all of your owners if you drop wind coverage? I mean, it would be catastrophic. So very, very unlikely that they're going to have any desire to let you drop any type of wind coverage.
So we also have another one. Legislature, I guess this is going to be back to Don. There's a little confusion in the chat right now when it comes to filing claims in a catastrophic loss like a Hurricane Ian. If the associations are insured by Citizens, do they get assessed a portion of their premium before the carrier will pay out the claim?
That's also a Jeff and Lisa question, but the answer is, in my understanding, is no. The assessment, it has to do with the overall loss ratio of Citizens, and when does it kick in for those assessments. And it's a tiered assessment program. And in most cases, if you don't have the ability to get to it, you can go on their website, and I think they explain how that assessment works. And I think it's up to 45% is what they can go to.
Right. So what happens is if Citizens runs out of money, then they have to turn to their clients first, and then they turn to all Floridians, basically, who have insurance to cover their losses. Citizens is truly backed by you and I. While they're not a state, they're not a government, they're not backed technically by the full faith and credit of the state of Florida. Effectively, they have the ability to tax all of us via assessments directly, and that's how they operate, and that's what creates this challenge. You all are already paying assessments, maybe not through Citizens, but when these insurance companies fail, you pay through what they call the Florida Insurance Guarantee Association. Kind of like we have FDIC insurance on our bank accounts, Florida has insurance coverage, self-inflicted insurance coverage for failed insurance companies so that those claims can ultimately be paid. And we've had, again, 9 failures in the last few months. And so you're paying assessments today for FIGA. What we don't want to see more of is Citizens assessments, but it's very likely that you will see Citizens assessments considering the fact that now they're going to insure 2 million policies and they don't generate enough cash up front. So if there's a large storm event and Citizens is sitting on all of these policies and they don't have enough cash to pay all their claims, they're going to turn around and assess on top of what you're seeing with the FIGA assessment. This is how fragile and dangerous the property insurance market is in the state. Why, people like me, other than like setting myself on fire, have been screaming about this stuff for the last 3 or 4 years, because we are seeing a market breaking down in front of our eyes. This is what it looks like. It looks like carriers collapsing, leaving the state. Even the surplus lines companies saying we're already maxed out on what we're willing to write in the state, and we're not willing to write you. Citizens growing to a cap where are going well beyond where it's ever been before, and then it takes years for that ship to turn around. We did not get to the situation in 1 year or 2 years. We are 5 or 6 years into this trip, right? Even if you turn around right now, you don't get out in 3 or 4 months. You get out in 4 or 5, 3 or 4 years. And that's where the legislature, that's where the state is right now. It is in an absolute, it's in an area where you have very few legislators who understand the complexity and the challenges of this market. At the same time, you have the market collapsing. And as a legislator, they've heard from years and years and years, the market's, they've heard this problem. The sky is falling, the sky is falling, the sky is falling. Now the sky is falling. And
it fall today, half an hour ago, they just entered another receivership order for UPC Insurance Company headquartered in St. Pete, Florida. They have 10,000 outstanding claims. I'm trying to get their policy count right now, just while we're on this.
And we fully expect 3 or 4 more to go under by June. Now, I don't know how that's going to affect the condo market as much as it affects the residential homeowner market, but any loss of companies reduces capacity, and therein lies the challenge.
We have another question that came up earlier in the chat. What about having the association do a municipal bond for redevelopment financing instead of insurance? Is that a possibility?
You're talking about the state issuing you talking about the condo board issuing a bond or the state issuing a bond?
It looks like the condo. Can they self-insure? Is that a thing?
They can self-insure. They certainly can. I mean, that's a whole nother bucket because they're going to have to.
They can self-insure. They can self-insure until the first bank finds out.
Right.
Right.
And then it's over because they will force place coverage immediately on all the mortgages in that building.
So needless to say, it is required to have insurance in the state of Florida if you are an HOA or a condominium or a co-op. You cannot.
Unless they change the rules for lending, because we are bombarded by these banks. They want to see appraisals. They want to see insurance policies. They want to see everything before they'll approve loans now. And it's gotten very difficult for the consumer, whether you're a buyer or seller. And maybe Jeff can enlighten us a little bit on that one as well, or Lisa.
If I'm a bank and I see an HO6, a unit owner trying to sell, I want to see the succeeding, the buyer. I want to see the underlying policy. They call it the underlying policy. I want to see the association policy. And I'm not going to be happy with a self-insured plan. There is talk, Don, about creating what are called captives, which is like a self-insured fund where everybody kind of pulls together. But and I'm got plenty of experts around me. I'm still not convinced that's going to solve our problem. I think we do. I think we go back to the 3 short-term, long-term, things like what Rick and Aaron are doing to help package up what these condo associations look like and give you the tools to present them. Number one, be diligent with your repairs and documentation. Number 2, and number 3, bitch about reinsurance. Back to you, Don.
Well, if everybody remembers Gene Francis and Wilma, the state did allow or attempted to allow self-insuring by groups. And there was one here in the Palm Beach County area that tried, they really made a great effort to get it done. I think they got 25 or 30 buildings that wanted to participate, but it never actually made it in, there because they started seeing all the problems with it. If one building suffered massive losses, it's going to take the entire self-insured fund down. So none of them got off the ground. So I don't anticipate it ever happening again because there's just too many moving parts that can't be resolved.
Well, I think the big challenge is you have concentration risk, right? So you have all of these condos in the same geographical area, and if there's a catastrophic event, they're all going to get hit, and then they're going to run out of money, and they're going to have to go out and buy reinsurance too, which puts us right back into the challenge, right? When you're running an insurance company, you're trying to spread your risk around the state as much as you can to reduce concentration risk. It's just one of the big risk factors they face.
And I think about this like one step further with if you were attempt to self-insure as an association and you needed to do a massive roof repair or a concrete restoration project and went to a bank to seek funding for a loan, they're not going to give you the loan without an insurance policy. It's part of their requirements because their requirements have now changed. So it's not just do I or do I not need insurance, it impacts so many other things within the association itself.
What I do think you will see is much higher deductibles, which is essentially a form of self-insurance.
Yes, I'm glad that finally came up, so I can comment quickly on that one. We do a lot up in Martin County as well as far south as Monroe County. But we're being told next year, unless things change, we could see 10 to 15% windstorm deductibles within a mile of the ocean. So that's going to be very difficult across the board for everybody.
And even this year, what I've seen from a restoration standpoint with my clients, an average deductible for an association 5 years ago was anywhere between $2,500 and $5,000 for an everyday water event. And now I'm seeing deductibles upwards of $25,000 just as a standard coverage, if $100,000. So as an association and dealing with our day-to-day perils and issues of a cast iron pipe breaking in your building, you now need to budget for your deductibles as an association and take a look at your loss history and see, what have I suffered average the last 5 years per year? How many times am I submitting a claim, and keeping that cash as a part of your operating expenses, so you're not turning to your insurance coverage for every single claim that you're having within the building that's less than your deductible, or potentially $5,000 or $10,000 more.
Right. American Coastal, as of 12/1 of last year, issued new reinsurance guidelines, and what they've gone to 10,000 AOP, which you just discussed, minimum deductible there. And also they're at 5% minimum, and they're also looking at $130 a foot, and all American Coastal policies are in that position now. And they did reduce their reinsurance capacity from 100 million down to 50 million. So that's another problem.
One of the things, I'm sorry, Don, go ahead.
Well, on the final note there, we're now being forced into being extremely creative on how we have to do insurance for all these associations, especially when you're getting above 50 million.
Yeah, one of the things that we've kind of looked at pretty strongly is the going back to the 5 carriers that write the book of this business in the state. And what we've tried to do is, with our program, is try to reach out to the carriers that left the state and get some type of manuscripted policy that we can invite them back in the state, that they can come back here, do business in the state of Florida, and eliminate fraud, eliminate appraisal, eliminate litigation, so they can just be concentrating on just what they used to, which was managing their risk under normal peril. So I think we as a group also need to look at, how can we get more of these highly rated carriers and reinsurers back in the state? And maybe that's a question for Jeff and Lisa.
Sure.
But I think until we get them back, I think the 5 that we have, they're kind of controlling the market.
Yeah, the only way you're going to get capital to come back into this market is if it's profitable.
Right.
None of you would invest in a business that you knew was going to lose money. And until that's why it was so important that the legislature did what it did to try to mitigate the lawsuits and things of that nature. But again, even if with your own money, would you invest right now in a brand new insurance company in the state of Florida, given given the loss history that we've seen over the last few years? Probably not. And so in people who are sitting on 10, 20, 30, $50 million to invest in a state, they're just keeping their powder dry, and they're going to wait to see how this thing plays out over the next 24 months before they deploy new capital into here.
I agree. I'm going to wrap up this with some final thoughts from our panelists, and we are at our time limit right now. Any of the questions are in the chat right now. We're going to send to the individuals on this panel to address those things as well. And Don, any final words from you?
Yeah, I think probably the best thing for everybody to do is take a really good look at your associations, get with your professionals, and don't wait to the last minute. That's the best thing I can tell you, because these insurance companies are getting more and more difficult, and I don't see it getting any better anytime soon.
Rick, any closing words?
Yeah, great. Thank you, everybody, for joining today. I think I was certainly enlightened by all the panel. Thank you very much, panel. It was super, super informative. I learned some today, Lisa and Jeff. Thank you so much from that side. I'm used to being boots on the ground like you, Aaron, and it was really nice to hear a different perspective than what we normally see each and every day.
Katie?
And I thank you all for being here. I'm sorry, Paula had to jump on a mediation at 11:30, so she did have to jump. So I'm the new Paula, but we definitely appreciate that you all attended and, hope you got some great information. As I put in the chat, we'll be sending out contact information for our panelists. With the exception of Mr. Brandes, he's donating his time for us as a former senator. So if you have any questions for him, you can direct them through Lisa Miller. We will also be sending you some more information on CAI. Obviously, Aaron and I are on the board for the Gold Coast chapter, but we advocate for CAI nationwide. They're a great organization that's main purpose is advocacy and education about community associations for managers, board members, and the business partners in our industry. And then we will also provide you with some local elected official contact information, as well as the governor's information, because the most important takeaway I think I got out of this, even as a CAM for years, is you have to talk to our elected officials.
Absolutely.
Absolutely.
Former Senator, would you like to say a few parting words?
Sure. Let me just tell you, one of my big hobbies is I'm a pilot, and as a pilot, you always try to stay ahead of the airplane, right? You want to know, and so my counsel to you is stay ahead of what's going on in the world of property insurance. Think ahead of what's going on in the world. You all have the responsibility to be the experts for your communities, for your boards, and they are much like legislators, just lay people trying to get through it, trying to figure it all out. And it's your responsibility to stay ahead of this stuff for them. You are essentially the pilots of this plane, and the success or failure of this flight is largely dependent upon you being able to stay ahead of what's going on here. So that's one piece. The second piece is please sit down in front of your legislators, your local House members, and your local state senators with one consistent message. This association needs to come up with one consistent message, and you need to beat that over and over and over again. They need to see what's the problem is. They need to see your bills and need to understand from you what's going on, what the challenge is, but come to them with the solution. The most immediate thing you can do is work on the reinsurance piece. That is something that the legislature can do, and frankly, only the legislature can do. So that needs to be part of the message. But stay in front of this stuff. Keep being the experts, and don't stop learning when it comes to what's going on in the world of insurance. It is by far the most challenging issue most of these associations are going to face in the next couple of years.
Thank you, Jeff. And Lisa?
What Jeff said.
Hey, I agree with that one.
I mean, he is, when I first met him 12 years ago, I thought, wow, and we spent hours talking about this, and due to this day, and he's not, just because he's not in office doesn't mean he's not leading. And you see him out on Twitter, and he's talking to the governor's office, and he's just encouraging people and volunteering his time. So remember, for those of you that are still with us on this webinar, 3 sentences. I watched my insurance premium double from $250 to $750 or quadruple. I know reinsurance drives that. What can you do to bring down our reinsurance cost? What will the state be doing to do that? Because I'm going to be watching, and it's about us and my 300 unit owners. It's pretty simple. We know we can't change the weather. Remember what I told you, 3 things. Can't change the weather. The governor and the legislature did a great job on litigation. The governor came out Wednesday, said he's sick of these billboard lawyers. He's going to take on billboard lawyers and bus wraps and all that stuff. He hates it, but we got to get him focused on reinsurance. So that's the 3rd piece. Lastly, this is all about you. You're the board members on the front lines. These unit owners are counting on you. You're all volunteers. God bless you for volunteering, but you're great Floridians for doing it. Use tools like Rick, listen to your agents like Dawn, listen to experts like Jeff. And of course, CAI is leading the band and doing everything they can. I'll be right beside you. I'm in that Capitol every single day. I got 25 legislative aides coming to my house Saturday night. Guess what we're going to talk about? All right, let's go forth and get this done. I want to see these phones ringing. Back to you, Aaron.
Thank you. In behalf of myself, the Rapid Response Team, and as your current president of the CAI Gold Coast chapter, which is also a volunteer board position, we understand what you're up against as board members and as property managers, and there's so much information to wrap your head around. Please, if you have any questions at all of our information is in the chat. You'll be receiving an email from us. If you have any need or need a town hall meeting at your property, communication is everything and education is everything, and getting your community together as a whole and explaining the why behind the message is the most important thing. If we can get your community to understand why these things are so important, why the preventative maintenance is important, because it affects, like I said before, every other facet of your community, then we're going to be a step ahead of the game and we'll be steering the plane, like Jeff said. So on behalf of this entire panel, thank you all for joining us this morning. You will get a lot of communication from us moving forward. And if you need anything in return, please feel free to reach out to any of us at any time. Have a wonderful rest of your day.
Thank you.
Bye,
Have a
everyone.
great
Thank you,
weekend,
everybody.
everyone. Thank
Thank
you.
you.
Thank you.